This is Moniology on Markets, and this is the Uranium Sector Review for October 14th, 2018. So we'll start with taking a look at the URA ETF, the Uranium ETF, from a monthly perspective. As you'll see here, it's been consolidating since basically middle of 2015, and since we broke down at the beginning of 2015 here, and now we've been consolidating between $10 and $19 a share. And even though the Bollinger Bands are squeezing tighter and tighter, and we believe that there's enough evidence to suggest that the breakout will be to the upside, right now the consolidation is nothing more than just that, which is a consolidation. Until we have a breakout of the Bollinger Band to the upside or the downside, don't expect to see any long-term progress there. Now, looking at the weekly perspective, I do see some bullish signs. So I want to point out, first of all, this trend line that's taking place here. Every time we're hitting this upward boundary here, it's both in momentum as well as price. We seem to be getting a lot of selling pressure. The difference between this particular move to the upside is that there's quite a bit of positive divergence. So you see the momentum here basically hit 50 on the RSI before pulling back, and it's the same momentum as we had when price was at 1475, which is considerably higher. Also, the volume over the last couple of weeks is very positive. You see a huge spike on this downward sell-off this week, but given where the market's been, not a surprise. I did expect a couple of weeks of consolidation, perhaps a shakeout of the feverish bullish positioning of a lot of traders, and I think eventually we'll break out above this trend line. But until we do, I don't think that this is a long-term buy. URA on the daily perspective. Now, this pullback, if you saw the video last week, I said would not be surprised if we break below this 50-week day moving average of 1296, just to shake out some weak hands here. And sure enough, that's where we fell below that point over there. Hit a low of 1266, but basically the most important thing is not to look at price. As you know, from my perspective, it's momentum. And so the last time we broke out of this downtrend was here in September 10th. It was around this area on RSI, and sure enough, we came back, and now we are testing that area as well, again rather. And I think that this is an area over the next couple of weeks where we should consolidate, and if we can hold this area above 1250, then I think we're going to end up moving higher and breaking above that 1367 high point of several weeks ago. There was enough positive divergence to suggest that this move was not just a short-term bounce, but rather the beginning of something more substantial. But we shall see. Here's the uranium on an hourly perspective, and again, when we looked at this video last week, we suggested that because of this negative divergence, where you saw basically a double top, but you saw a significant decline in momentum here, and that basically triggers a sell-off. We had another attempt at a rally, and then the 50-hour moving average has been serving as resistance, and now we're consolidating below this point of support right over here, and I think it's going to hold. You see that you've got the PPO already on the upward swing, so would not be surprised if we resume this upward trend in the very short term. Okay, so let's take a look at some of the names. This is the first time I'm looking at these names this week, so I'm going to be looking at it alongside of you for the first time. So bear with me. We've got Apache Energy Corp, API.CA. We've had very nice positive momentum here, but we couldn't break above the 70 mark. I pointed this out, that's the last price momentum area that price really broke down, and sure enough, it's serving as resistance this time around. So the pullback for a couple of weeks is a very healthy one, and they've got support at the 50 and the 200 EMA below it. I just think that a couple of weeks of regrouping will be very, very healthy. You should see 50 RSI hold for this to be confirmed. So you got Cameco, the major player in the uranium space. It's shown positive. Well, you know what? It's kind of this particular run here. If you look at it, 1238. It hit a price high of 1238, and actually momentum was lower here than last time around at well, it was higher than 1215. That's positive, but it was lower than last time we hit at 1168. So there's some weakness that was built into this most recent rally. You combine that with the 50 EMA and the 200 EMA basically serving as resistance here. So the fact that we pulled back is not a surprise. The question is what happens. My hunch is that we'll find support at the 50 RSI level, so we might see a little bit more downside, but ultimately I think the middle Bollinger Band, the 50-week moving average at 1039 will serve as very strong support if it even gets there. You see the PPO is above 0, so I think this is well positioned for a break, eventual break above 13. When that happens, that's really going to be a confirmation to go long in the space from a longer term perspective. Alaska Uranium, CVVUF. Another one has done fairly well in this last rung. Its PPO is above 0, so it's in a positive trajectory. You've got positive momentum and divergence here. We're above the 50 RSI level, and so RSI is higher today at 28 cents than when RSI was at 35, or price was at 35. So that's a positive development. I should see this. I can see this one moving towards 40 cents in short order. Deep yellow DYLLF. I pointed out that we might see a pullback. You saw a negative divergence here versus when price was lower here and here. So this particular move was largely driven by momentum traders would be my hunch. But that being said, I think there's a lot of evidence that following a short period of consolidation, we're going to break above that 35 to 40 cent zone and break higher. So keep this one on your radar. Denison Mines, DNN. So this one, I'm just going to draw some lines of resistance here right now for future reference. If it wants to cooperate with me, sorry about that, guys. All right, so Denison here is in a very positive trajectory. I like where it's headed, and I think that it's going to consolidate here for a while. But so long as it stays above that middle Bollinger Band at 53 cents, I think that's positive. Again, no surprise that we found some resistance. That's the last point of breakdown right over here last time around. So again, consolidate here right below the 200-week moving average, and then once we break out above that, that's your sign to go long unless you're already in this position. Encore Energy, EU.V. Very happy that this pulled back because it's going to represent a very good buying opportunity if it's not already in place. And we had some negative divergence over here versus price that was double topping, but divergence was not double topping, it was declining. And so the pullback was inevitable. We're finding some support at the 200 EMA around 11 cents. That's probably a good area to buy. Let's see what happens on PPO. Do we go break below 0, or do we move back higher, which is probably my higher probability. Energy Fuels, UUUU. This one has some negative divergence here around that 4 area. Momentum is not as strong as it was when we hit 364 last time around, so pullback here was inevitable, and I think we're probably going to see some lower prices, probably test the 280 level at a minimum, but even possibly go as low as 2 if the uranium sector does pull back. You see PPO has broken below 0, so some weakness here in that name. Fission Uranium, FCUUF. One that I like, it's showing some positive momentum here, and so even this pullback should find enough strength, and I expect to see 60 and 70 be hit in the not distant future. Forces Metals, FSY.TO, looks great. It's showing positive momentum, and I expect it to run further, certainly upon the resumption of the uranium uptrend. Okay, GovEx Uranium, GVXXF. This one I pointed out was a very, very nice bullish consolidation wedge pattern. We broke out above that, and we hit 20 cents as I anticipated here, but we've had a couple weeks of pullback. So long as we hold this line from the upside, and so long as we're above the 50 RSI, both of which have happened so far, that's been a great opportunity to pick up some shares in the pullback. a break above 20 cents likely takes this to 35. So I really like the setup here. Laramide Resources, LMRXF, another one that's kind of broke out of this downward trending bullish consolidation. We broke out above that. We're seeing some pullback here, which is fine. And the 200-week moving average at 32 is serving as support. And I think that will probably not go much lower than 30 cents, possibly as low as 25, but these would be very good entry points on a pullback. But a break above 40 likely sends shares to 60 cents or higher. Next Gen Energy. Pulled back here as you see momentum found resistance at the last point of major price breakdown right over here from 285. So far we haven't been able to hold 50 on a weekly, so we might pull back some. But I do see things improving here in terms of momentum. I want to see this 50 recaptured very, very soon for a confirmation of this run higher versus renewed weakness. Sky Harbor Resources, SYHBF. Also, we found resistance over at the precise area of last price breakdown around 70. Let's see if the 50-week moving average in the middle Bollinger at 35 hold. So far, so good. As well as this the 50 level. If they hold, then this is going to resume higher, head towards 55 and beyond. Your Energy, URG, looks weak, honestly. I don't know what's going on a fundamental level, but RSI is closed below 50. You saw some negative divergence, and so I wouldn't be surprised to see price hit 60 cents, especially on a washout one, if the 50 and the 200 EMA are around 71 are taken out. Uranium Energy Corp, another one that really pulled back some here, so this could be a good opportunity to add. This is going to be good support. The previous support of RSI, we're right around that point right now, so that's a nice area to keep an eye out for a very good long-term play. Finally, a couple more names. Western Uranium Corp, WSTRF. I mean, this one has been going crazy ever since the breakout above that 120 mark. But this pullback is going to present a buying opportunity, but it can fall back all the way to 120. So be careful with this one. This is, if you're not in this name, it's not a buy unless this breaks back above 220. And frankly, on a pullback, you should be looking at that 120 for some fairly strong support. To add or initiate a new position long. And then finally, by popular demand, Westwater Resources, WWR, this one has been showing a little bit of positive divergence. So you see price go from 35 cents to 16 cents, but momentum didn't make a new low. So that's very constructive. You see PPO moving in the positive trajectory, but unless this trend line breaks to the upside, this is not to be touched with a 10-foot pole. So I like what I'm seeing on the short term, but this analysis is from a longer term perspective. So from that perspective, this is non-investment territory, not yet at least. Guys, thank you very much for watching. Appreciate your support and your shares on Twitter, StockTwits, and your support on YouTube. Any comments, any and all comments are welcome. And if you want to see additional content, please shoot us in the comments section and let us know what you'd like to see. Thanks and have a great week.